In today's video, we will be going over Rollins Incorporated. Stick to the very end to get my rating on the stock, and feel free to drop a like if you enjoy. Without further ado, let's get into this video. Rollins is a North American consumer and commercial services company that specializes in pest control. You may know them through a couple of their subsidiaries: Orkin, Western Pest Services, Trutech, and Critter Control, just to name a few. They were founded in 1948 by John W. Rollins and initially started off as a broadcasting company before moving into pest control. Weird switch, but okay. They currently have around 14,000 employees and operate in 65 countries globally. Now, let's move into their financials. They have continued to grow their revenue and net income, and their margins have slowly picked up. Now, their growth has been good, but one thing important to look at is that price to earnings ratio of 64. The average PE for the S&P 500 has historically ranged from 13 to 15. So, this price tells us that these investors are expecting crazy growth out of the stock, or it's just overvalued. Luckily for us, the most recent earnings call for quarter 4 gives us a little insight into what we can use to effectively evaluate this stock. The call starts off with the announcement that 2 older board members are retiring. Now, there are 2 ways we can look at this. Firstly, 2 very important members left, signifying less experience on the board, or room has opened up for fresh blood that could further bolster their growth. So that's pretty interesting, and only time will tell with that. Now, let's move on to their recap and their expectations. I don't want to bore you with lots of numbers, so I'll just give you the general scoop. Their quarter 4 revenue and net income increased by 6% and 23% respectively compared to the same time in 2019. And their full year revenue and net income increased by 7.2% and 28% compared to 2019 as well. First of all, let me just say this is really good growth for a company that had their commercial portion hit hard by COVID. Their commercial revenue was down as commercial pest control was hit hard by the government-driven shutdowns. People left the office, leading to less need for pest control in the commercial space. However, they still prevailed and continue to narrow revenue shortfall gap each month, with quarter 4 only 0.6% below last year. This ability to come back really attests to the overall culture they have there over at Rollins. This is a good company. They've expanded their presence not only in the US, but in the international scene. They added 10 strategic acquisitions in the United States, Canada, UK, Australia, and Singapore. One service of the company that is critical for success in 2021 is their mosquito service, which has increased by over 30% year over year. They expect similar growth in 2021 as people spent more time at home, effectively spending more time in their yards. These people will recognize the need for mosquito control. The one major benefit of the use of mosquito services is that it offers better margins compared to other products that they have. It's a simple concept. More revenue with higher margins equals higher net income, which then equals a higher valuation. To wrap up the call, they stated that they don't know what their 2021 expectations will be for sure. This isn't a negative. A lot of companies have had trouble pinpointing where they will be, especially in this time of uncertainty. Now, let's move on to what I think the value is and my rating. Due to their strong growth and proven culture of overcoming adversity, I believe that valuing them at 20 times earnings is fair. This is a good company that is growing well with a good culture. That is a recipe for success. However, we need to come back to reality and realize that 60 times earnings is not reasonable by any means. I believe that a market cap of 5 to 6 billion is reasonable, but the current market cap of 16 billion is stupid.
That's not stupidity, that's fraud.
Tell me the difference between stupid and illegal, and I'll have my wife's brother arrested. That was fine.
You can probably tell where I'm going with this. I'll end it off by saying Rollins is a sell. As stated prior, they are a good company in an irrational climate. It's not their fault by any means. They are currently trading at $33 a share, and a reasonable price for them would be something around $14. If it ever gets to that point, and I will alert you guys, then it will become a strong buy. This brings us to the end of the video. If you enjoyed, please smash that like button and subscribe for more content similar to this. I'm Matthias Trades, and I'm out.